What's up, good people? Welcome back to Stock Up with Larry Jones. Today, we're going to talk about the hottest stock to look at for this coming week. I'm going to talk about the one negative that I have about the company and a boatload of positives. Okay, let's go. All right, for those of you that's new to the channel, go ahead and hit the subscribe button and the notification bell. For those of you that's not getting all of the notifications, then you haven't hit the notification bell, right? There's a lot of money to be made this year. And as always, if you see a respond from me, it should be grayed out. If not, it's spam. I never post a phone number, talk about a WhatsApp, and none of that. That's all spam. Don't fall for it. Okay, good fam? All right, let's go right to it. CCIV, which is Churchill Capital, and Lucid Motors, the merger. Okay, it is going to be the hottest stock to watch this week. So I know I think it was Thursday's video, I told you guys to enter at your own risk. I'm still going to tell you that. But I told you I was going to wait. And then Friday morning, pre-market, I was just like, I did some diving Thursday, and I told you guys this in my Friday's video. I had some FOMO and I got in, and it wasn't just because of FOMO, but I saw what was going on with the company, okay? I took a few notes here so I don't miss anything, okay? First off, this is not a new company. They've been out. And what happened is Lucid Motors was a new startup, EV. And the Saudis dumped over $1 billion. I think it was something like $1.3 billion into this company back in 2018. And so they wanted to shore them up financially. For those of you that don't know, EVs, electric vehicles, they have to put a ton of money into R&D in the build out of their factories. They could have the best technology in the world, but they have to raise a lot of capital to get this out. And just remember, they have to build a lot of plants in a lot of places because you can't, it's not cheap to ship cars, okay? But the infrastructure, the tooling and all of that, you're gonna burn through hundreds of millions of dollars, okay? And so they needed the capital. This is a SPAC, Special Purpose Acquisition Company, right? So Lucid Motors is the product, and the blank check company is Churchill, right? They have the capital. And so this merger so far is still rumor. I think by this week, I think within a week of today, it will no longer be a rumor. It'll be a done deal. There's a key person that's on both sides of the deal. Remember LCA and GNOC, and remember how you had Golden Nugget, you had the CEO on both sides of the deal. And this is kind of the same deal, right? So that was one of the things that piqued my interest. The hiring of positions that's needed for a SPAC to go through. They're going to do a SPAC because they could come public quicker with a SPAC rather than a traditional IPO. Okay. And so a traditional IPO, I mean, it's generally a year, but with a SPAC, they can come cheaper and they can come public quicker with a SPAC. So that's what a SPAC is, a product company and a company with some money. That's all it is. But I'm going to talk about the negatives and positives with Lucid Motors, right? Here's the negative. It's still a rumor. And even though it was an inside rumor, it was still a rumor. So this is a speculative play. You could get in Monday morning and lose more than 60% of your money if this SPAC does not happen. You can lose 60%. So I'm not telling you guys to get it. Remember, I'm not your financial advisor. I'm just Larry telling you what I would do. Read a disclaimer down underneath. But for those of you that's thinking about getting in or already in, I just want to shine another light and talk about some things that you've already heard, but some things that you probably haven't thought about. Okay. So my one negative about this company is it's speculative. It's still a rumor. Until the ink is signed and the company says it's a go, it's speculative. But here's what I do like about the merger with CCIV, Churchill, and Lucid Motors. Number one, the Spac hater of all, Mr. Jim Cramer, blessed it. For those of you that know about Jim Cramer, he's a big talking head in the stocks. He is a host on CNBC, and he has his own show. And he hated SPACs, and he caused, I believe, he caused some SPACs to just bottom out because he said he didn't like them, right? And he's a market mover. Don't get it twisted. These guys are market movers, right? So that's one of the things that I do like. The second thing is you got a key person on both sides of the deal, right? Just like LCA. And so when you got a key person on both sides of the deal, it's easier to make the deal happen, right? Here's another thing. Their technology is supposed to be better than Tesla's. And that's what everybody is saying if you research the stock. It's supposed to be better than Tesla because two of Tesla's key people are at Lucid Motors, right? Only 28% of their stock is owned by institutions. Now, let me explain that. In the old days, I used to like when institutions bought a stock, just like, the coin. I'm not going to mention the name because they'll start making comments. The bit, that coin that everybody's buying, right? When institutions start buying it, especially banks like JP Morgan, it gave me to go ahead to go and buy it. But having said that, sometimes on these hype stock, you don't want big institutions in because it's pump and dump. Institutions are making money off of what they call Robinhood investors. Now, I'm not saying this. This is what they say. All right. It's new investors. So new investors get in the market and they don't understand the market. These big institutions, or what we call whales, will run the stock price up. They'll run it all the way up. And then everybody's going buy, 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 buy. And then they'll make money going up, and then they'll make money off short the stock and make money going down, right? And then you guys push the price down by selling, by panic selling. And then they buy it back in at a cheap discount. And yes, it is quote unquote illegal, but how could you catch them? And the feds need to do more about that, but just be aware of that. That's what institutions do. And so when you have institutions that owns more than 50% of the stock, you have the danger of that happening. Follow? But because they only own roughly around 28%, it makes me even more excited about the stock, to be honest with you. And so now those are the things that I like about it, which is a lot. Think about this. I'm going to say it, buy the rumor, sell the news. Think about this on your plays, good people. You could get in pre-market. I've done this. For those of you that are experienced, you can literally buy in pre-market and sell it an hour after the market opens, and you'll probably make money. All right? And get out. I've done that so many times because I didn't want to go for the roller coaster ride. Or you can buy the rumor, sell the news, which is buy the stock and then just let it play a couple of days and pray that they don't make the announcement and let the stock run up and then sell it just before they come out with the announcement. That's all that buy the rumor, sell the news means, right? You're making money on the hype. You could do a long play. You could get it right now. And I believe if it does happen, you're going to ride it up. Of course, there's going to be some profit taking down the road and the stock price is going to go back down, but it's not going to go back down to where it is. So you can be in it for the long haul. And I believe that if this deal does go through, it's going to be a Tesla chaser. This deal will be a Tesla chaser. And at this price, it's going to make a lot of people a lot of money. All right. I'm going to put this in my, I'm just weighing it out day by day, but this is going to be it's going to be a hot play. I'm going to be a pre-market watching this. We talked about stop losses, right? I'm going to tell you this. You could put a 10%, a 15% trailing stop loss on this stock. It's going to be volatile. It literally can run up and run down 15% in a day. And it'll sell your stock, and then it'll continue to run back up and make a bull run. So I can't believe I'm saying this, but I'm saying this, fam. I got to keep it honest with you guys. I'm not doing a trailing stop loss on this Monday. And if I do, it's going to be by 20% because it's so volatile and it has these big swings because it's still speculative. And so those are the things I want you guys to think about. Remember here, we don't just give you the hot stock. We give you the theory behind it, and we give you information to teach you how to invest, to become better investors. So we want to know the principle behind what we're doing, good people. All right. For those of you that's been rolling with me, go on ahead and hit that like button. Keep me alive. I hope this helped you if you're on the sidelines or if you've gotten it. But I really wanted to help the people that's on the sideline. If you cannot afford to lose 60% of your money, don't do it. But if you can afford to lose it and you want to bet on a good stock, me personally, I think it's a good bet. Everything is pointing that way. But I will tell you, monitor it by the minute. All right, good people. All right, that's it. That's all I have for you today. And we're going to keep an eye on this. I am going to be doing a $5 a day challenge. And I just want you guys to know that it's going to be a $5 a day challenge. And if you want to know the theory behind that, I want you to watch the video that's going to pop here at the end. Now, on this video, I use 35%, but you can use whatever you want. Use 20%, 15%. I needed to get this out because this is going to help the average American be financially free. Okay? All right, good people. Love you as always. Live, love, laugh, and learn. Check out this video. Peace.